Hello traders, welcome back to my YouTube channel. Thank you so much for clicking. Kindly remember to subscribe, like and comment down below. We are going to be looking at the weekly chart of the Euro USD. So today we are focusing on which fair value gap to focus on. So when considering the fair value gap to focus on, there are two things I like, or rather three things I like to consider. I like to consider the higher time frame, which always takes priority over any other time frame. And then you want to be looking at fair value gaps that coincide with higher time frame. If you are looking at a lower time frame, for example, if you're looking at the weekly chart and you're looking at the daily, then the weekly chart fair value gap will take preference over the daily chart. So the third thing I like to look at is, are we at a key turning point? So I already did a video on fair value gaps. I explained what fair value gaps are. So if you have not checked it out, kindly check it out. It's above this video. So go there and check out my definition of the fair value gap, the ICT Fair Value Gap. So let's dig in. So to start off, I like to focus on a fair value gap that is a higher time frame. So for instance, in this example, we're looking at a fair value gap. This fair value gap is from the monthly chart, and then you have another fair value gap from the weekly chart, and then this smaller fair value gap is from the daily chart, which we'll be looking at later. So the weekly chart drop into a monthly fair value gap. So once we hit that monthly fair value gap, and look at how sensitive that midpoint is. So we hit that midpoint and then started reacting off. So once we react off and we took out market structure, then this fair value gap is becoming relevant and it's drawing towards higher targets. So when you look at this example, this monthly fair value gap will always take priority over any other fair value gap that formed. For instance, we had this weekly fair value gap, we had this one. So in some instance, you might come into a weekly fair value gap like this one and expect the market to drop lower because it hit this fair value gap. But the monthly chart will take preference over this fair value gap because we have already hit a higher time frame fair value gap. So the number one thing you want to take preference is take priority from the higher time frame. Don't go into a 5 minutes fair value gap and expect the market to react from it. You want to see it react from higher time frame. So if you're a day trader, preferably you want to be using the daily chart fair value gaps to be trading. If you're a swing trader or position trader, you want to be using the weekly and the monthly fair value gaps to position yourself and to know where the market might be heading to next. So once you take preference on the higher time frame, then for instance this weekly fair value gap, when you drop down into the daily, it will take preference over the daily chart because once they create this fair value gap, or rather this fair value gap is created, then you want to see it retested and the market to drive higher because we're in the weekly chart. So we'll be dropping into the daily chart and expanding more. So even before it drop, we'll look at this point here. Actually, this is a turning point that we'll be looking at on the daily. The reason I'm noting it as a key turning point is because this is a weekly order block and it was driving towards this monthly imbalance. So once we hit this order block and we have a drawn liquidity down here, we expect the market to react from it and drop aggressively into this target. So this is a key turning point that we'll also be looking at, and we see how we could have focused on a specific fair value gap on the daily chart. So let's drop into the daily and look further into this fair value gaps and this key turning point. So we are now on the daily chart, and as you can see, let's begin with this one. So as you can see, we had the daily was already coming off this monthly imbalance. So such fair value gaps like this one, they do not, I rather say they do not affect the price action, because now that we have come out of this, the market does not necessarily have to keep coming down and fill every fair value gap. So for instance, like this fair value gap did not have to be filled because we already come down from the monthly fair value gap and we are targeting higher targets. So for instance, in this example like here, we see that this is a weekly fair value gap and we have the midpoint here, we have the higher point here and the lower point here. So within this bigger weekly fair value gap, we have a smaller daily fair value gap here. That's why my second point is that you need to find fair value gaps that coincide, not all the time, but sometimes you'll find that some fair value gaps in the daily might coincide with those in the weekly. So you want to be focusing on the daily fair value gap that coincides with it. We also had another here, but the market didn't find any need to come back all the way down here to rebalance because it was already rebalancing the weekly fair value gap. So if that fair value gap that you're looking at does not coincide with any higher time frame fair value gap or key turning point, then you're already looking at the wrong fair value gap. So another example was on the key turning point. So let's look at this key turning point. So we already established that this is a weekly order block. That's why I'm defining it as a key turning point. So any fair value gaps in this area will be significant. Any fair value gaps on the daily will be significant to price because we are at a key turning point. So for instance, this fair value gap right here, and I think this didn't get to this high, but we feel this imbalances right here. All these imbalances, we have this one and we have this one. And once we hit it, we expect the market to start driving lower towards the monthly target. So once this key turning point was hit, then we had this change in state of delivery right here. Actually, this is a daily order block. I did not outline that, but this is a daily order block. So once we hit that weekly order block, and then we see a response from the daily chart showing us that this market is now willing to run for sell side liquidity. So this change in state of delivery or are confirmed order block. I also did another video on order blocks that outlines how you define an order block in terms of how ICT defined it and how I understood from my own perspective of an order block. So I outlined that once you see a change in state of delivery, you will be seeing that liquidity, it will be running for liquidity, meaning that the market is now willing to run lower after hitting that key turning point on the weekly. So any imbalance that is left from this move, it's now significant for us to take any entries once it retraces back into them. For instance, if you see this imbalance, let's zoom in. If you see this imbalance, you can see that the market actually came back to rebalance that imbalance. And actually, the market is all about liquidity and imbalances, as I've always outlined. So it came back to rebalance, and just like Michael taught, the market is all about liquidity and imbalances. So once it comes back to rebalance, we see that it takes out even our previous highs as it enters and refills that imbalance. So once it refills, we see another change in state of delivery, and the market just starts delivering lower into sell side. So that's it. Actually, that's the best way to outline or select the preferred fair value gap. So no matter which time frame you're in, you want to be, if for example you're looking at this daily fair value gap and you're in the 1 hour 15 minutes, you want to be focused on this first and the direction that the weekly had given you and the monthly that it was drawing down here. Then you can now define your imbalances from the 1 hour or 15 minutes, but coupled with this daily, you do not want to miss the daily imbalances. Actually, I came to realize that the market moves using the daily imbalances and the daily liquidity. So once the daily liquidity or imbalances are taken out or reached, the market will reverse aggressively. So that's it, guys. That's what you want to be focusing on. So kindly focus on that and you'll find success in trading fair value gaps. Thank you. Thank you so much, guys, for watching. I hope this video has been helpful. If you enjoyed this video, don't forget to like, subscribe and comment. Also let me know what kind of content you want to see or any suggestions you have. Thank you.